Okay, so here's this week's portfolio. It's made up of 20 stocks as usual, and looks like 80% are in the US and 20% are foreign. And looking at the Morningstar style box, we see 98% of them are large cap companies, with 39% classified as value, 45% core, and 13% growth. And let's see, going down to the sector split up is kind of similar to what we've had in the past month or so, where we're significantly underweight on the cyclical companies and overweight on the defensive companies. And it looks like our healthcare piece has really stepped up the weight in our portfolio. We're more than double the allocation that the S&P 500 allocates towards healthcare. The three largest are energy, technology, and healthcare, which make up about 68% of the portfolio. Everything else is pretty much underweight compared to the S&P 500. Going down to a few of our ratios here, we have the PE of our prospective portfolio is about 14.58, and that is about 91% of that of the S&P 500. In the same vein, we've got the price to book ratio, which is about 2.72, which is 95% of the S&P 500. So you could say we're buying the earnings and we're buying the net assets of these companies for a little bit cheaper than the S&P 500 is. Our return on assets, return on equities is a lot less than that of the S&P 500. Also, our projected growth of the earnings in the companies are about 76% of that of the S&P 500, and that's a characteristic of value companies, which is what we're mostly investing in here. So there's not as much growth in the earnings. Let's see, our dividend yield is about 2.73%, and this is about 56% more higher than that of the S&P 500. Also, our average market cap is about 20% higher than the S&P 500. So that's the characteristic of large cap companies, which is what we're about 98% of our portfolios in large cap companies. So also here we have the top 5 companies in our portfolio are total General Mills, Cigna, United Healthcare, and Intel. So this makes up a lot of what we saw as the highest allocations in our portfolio with the energy, healthcare, and technology.